So we have to go ahead and talk about Tesla stock, as it recently had a nice little run upwards, but then ultimately came falling down. And in this video, I want to go ahead and highlight what led to Tesla stock falling down very quickly, and then also highlight what are some things that we should be mindful of moving forward. So make sure to watch this video in its entirety, because there's a couple of topics we got to go ahead and cover. Now, I do want to highlight that it wasn't just Tesla stock and Silo that fell down. In fact, if we take a look at the S&P 500 index, we see that it fell down a crucial level as well. And so a lot of market participants are wondering, well, why did the market fall down so hard? And it's really due to the labor data and kind of some of the uncertainty that we got from it. For example, the August job report showed that the monthly job growth went up 142,000, and the unemployment rate actually slightly ticked down below to 4.2%. Now, to the naked eye, or to someone who's not really following the labor markets, they may see this as just amazing news, right? It looks like the labor markets are cooling, but they're not cooling down in this, downward linear fashion, just going straight down, and so that's good. But there's a couple of things that kind of really created some uncertainty, especially after this report. For example, right off the bat, the 142,000 gain that we saw was still weaker than the general consensus that was around 165,000. So right there, that's already kind of like a bad kind of start. We're slightly below what the expectations were. But on top of that, we also had the downward revisions to the job growth in the prior 2 months, which pushed the 3-month moving average down to 116,000, which is significantly lower than what we saw in the beginning of the year. And so the main concern is, okay, yeah, this number was okay, but it was down what the expectations were. And then on top of that, we also got these revisions that we keep on getting from the labor market, where 1 month things look good, and then 2 months later, it's like, okay, actually those numbers were wrong. It wasn't as good. And so there's that uncertainty of, well, are we in an area where the labor market is much worse than what it actually is? Or are we actually just kind of seeing like this cooling off, slow down? And that's really concerning, because one of the things we want to pay attention to is where we are in the labor market, because the labor market is the bloodline for the economy. If people don't have jobs, well, that's when a recession takes place. Now, we had the economist from Wells Fargo highlight how a strong or weak employment report could have crystallized whether we get that 25 basis points or 50 basis point cut. But this report was a bit uncertain, and so we still don't know what we're gonna get. And again, the reason why this is important, right? I know some people might say, oh, 25 basis points, 50 basis points, potato, it doesn't matter. Well, the reason is because we recently shifted from a time in the market where bad news was good for the market, because that led to ultimately getting closer to rate cuts. But now that we're, coming to that September meeting where we're likely to get those rate cuts, as the Federal Reserve mentioned or highlighted or signaled, right? Well, the concern is, well, after these rate cuts, how is the economy going to do? And so we're switching from bad news being good to now bad news is going to be back to being bad. So just to kind of recap, we went from bad news highlighting that, hey, we're getting closer to the cuts, and that could be potentially good because lower interest rates will create a better environment. But now we're switching back over to, well, the rate cuts are coming, and are things really bad where we're entering into a recession, or are things okay? And the reason why this is important is because last week in the free weekly Market Pulse Insights, which, by the way, if you guys don't know, I have a free newsletter which you guys could sign up. I sent this out in the email highlighting how the S&P 500 has a different performance after the first rate cut, depending on whether or not we're in a recession or we're not in a recession. For example, if there's no recession, well, the first rate cut is absolutely bullish. But if we're in a recession, well, that's not good, right? That's kind of like what we saw back in, the 2007-ish area, the 2001 time period. So we want to know, are we in a recession? And so that's why we're putting a lot of emphasis on the labor data. And if the labor data is bad, well, that could lead to ultimately a big, bad recession.
No, God! No, God, please, no! No!
Now, real quick off tangent, recently in the YouTube community post, I highlighted just a friendly reminder that was a bit motivational and positive. And in the comment of that community post, I found this hilarious. Someone commented, "F the reminder, create a video, we're waiting." And so I thought that was really funny. But for those of you guys that only watch the videos, I'm not that consistent on YouTube all the time, right? The videos don't have a set schedule. But one thing that I am, or a couple areas where I am consistent, is for those within the Push and Profit private group, where I provide a daily briefing every single day the markets are open. So that's going to be the first link down in the description down below. But I also have the free weekly market post insights. And so if you're not catching my videos because they're not getting uploaded, those are just a few other areas where you could go ahead and get more insights of what my thoughts are in the market. But, I just thought that was a hilarious question. And I know a lot of individuals don't know that we have a free weekly market post insight where I send out what we're seeing in the overall market. So definitely check that out. But getting back on tangent, the next thing that the markets are going to be looking towards is, again, the consumer price index report, right? We recently just had the labor data, and you guys saw how down Tesla was after that report came out and how bad the market performed. Well, now the next thing the market is going to be looking at is how is inflation, right? Because again, that will tell us, will the Federal Reserve see this as a sign to do 50 basis points or 25 basis points? And how are things looking from, price stability, right? Is inflation still, on this trendward downwards, which of course would be good news? Or are, the issues with inflation rising back up? And so that's the next area that could be a huge, catalyst for the markets and whether or not we move upwards or downwards. But getting back to Tesla, of course, right? I know we talked about things from, a labor perspective or really just a macro perspective. I want to go ahead and talk about Tesla because we do have an upcoming event that everyone's going to be watching, especially if you're trading Tesla or if you're invested in Tesla or even people that hate Tesla, right? Everyone's going to be watching this event. And that is going to be the robo-taxi event, which originally was due to come in August and it was delayed. And so, this is an event that could be a huge catalyst for whether or not Tesla goes up or Tesla stock goes down. And I want to go ahead and kind of soften the cushion and highlight why this may be bad for Tesla. And I know, right? A lot of people are excited for this event, but I want to go ahead and talk about something. Now, first off, just the fact that it was originally delayed puts a lot more pressure on this next coming event. And if there's not really anything that blows the mind for investors and market participants, well, that's not going to really do much for Tesla stock. And it could be kind of like a buy the news or buy the rumor, sell the news type of event. But on top of that, we recently also had Morgan Stanley's analyst come out and say something that kind of aligns with what I'm saying as well. For example, Adam Jonas, who's an analyst at Morgan Stanley, mentioned that while he's bullish on Tesla in the long term, right? He mentioned that this short term, we may not see anything for Tesla. He mentioned that, while he's bullish on the long term potential for autonomous vehicles, expectations should be tempered in the near term. And that's kind of him just saying, look, I'm bullish for, autonomous vehicles in the future, but this event may not bring what a lot of people are expecting. I mean, a lot of the Uber Tesla bulls are saying this is it. This is the final time where we finally get Elon Musk and Tesla saying that we have fully autonomous vehicles that could, now do robo-taxis and kind of take over the business of Uber, where now if you own a Tesla, it could go ahead and pick people up and generate revenue for you. A lot of people have really high expectations. And this analyst is saying, look, he's bullish on this, being a possibility in the future, but you need to lower your expectations. And on top of that, he stressed how Tesla does have a permit for autonomous vehicles with a driver. They just don't have a permit for autonomous vehicles without a driver. And so that's kind of a big clue highlighting that we may not get, what these Uber Tesla bulls are saying on X. I mean, I see posts of people saying this event we're going to see Optimus, the robot, driving, or not really driving, but inside the Tesla car, getting out of the car, and the car's driving by itself. I mean, you hear all crazy stuff, right? And of course, I mean, if that were to happen, that would be amazing, right? That would be absolutely amazing. It'd be, the idea that FSD is fully solved, but I don't necessarily subscribe to the idea that we're just going to see robots in the car and the car driving itself and there's no steering wheel. And, we may just see just a nice little update on where we are with FSD, which of course is an improvement. But it's gonna really sour the expectations, the high expectations that a lot of market participants have. And so my opinion is that this is gonna be one of those events that isn't going to really live up to its name. I mean, that's just my opinion. That's what Morgan Stanley's analyst Adam Jonas kind of believes as well. But to really add, fuel to the fire, one thing that should also be concerning is that we had Jim Cramer, who recommends buying Tesla stock before the robotaxi event, October 10th, saying that this is going to be a huge event for Tesla. And if you don't know who Jim Cramer is, this is a guy where every time he says something, the opposite literally happens. And so it was a very sad moment when I heard that he was very bullish for this event. I mean, at that point, I was like, oh my gosh, this is it. This is it. I'm not buying any more shares of Tesla at the moment, right? Which I originally wasn't going to do anyways. I was going to wait till after the event. But I mean, him saying that just is almost like a confirmation that, look, this is going to flop, right? I mean, again, it's just a running joke with Jim Cramer that just so happens to be true. I mean, every time he says something's going up, literally it goes down. When he says something's going down, that's the time where you just got to call your broker or hop on your platform and hit the buy button. And again, that's just something that was a bit disappointing that I saw, but I want to go ahead and highlight a couple of things with Tesla from a technical perspective, right? We talked about, this event, we talked about the macro data that we recently got and what are some things we're looking forward to, but I want to talk about one thing from a technical perspective. Now, currently, when we're looking at Tesla, we've seen that for the last 3 years, it's been getting rejected from this descending trend line. And so ultimately, what I believe could likely take place is, again, that buy the rumor, sell the news type of situation where we still see Tesla rise up going into that event, but ultimately getting rejected very hard, just like what we've seen in the last 3 years, unless we have an amazing, kind of blowout scenario where we do see autonomy actually solved or some kind of signal or confirmation that it is going to be solved. But if it doesn't, well, that's going to really sour the sentiment for a lot of individuals, especially because it's been years and years of Elon Musk and, pretty much the Tesla team highlighting how this is going to be the time where things are going to be solved. Autonomy is going to be coming for these vehicles. And then it's just led to disappointment after disappointment. Now, there are incremental improvements, but the idea of it being solved has kind of been disappointing. And I believe that we may kind of rally up and then ultimately just get rejected very hard, especially if it's an event that was delayed and still doesn't live up to its expectations. But those are just my thoughts. You guys let me know in the comment section down below. Don't forget also to make sure to check out the links. One link is to join the Push and Profit private group where I have my daily briefings. And also check out the free weekly market post insights. So when you guys don't see videos from me, well, I'm active, with the newsletter and also in the private group. And before you guys go, make sure to check out this video right over here. And I'll see you guys on that next video. Take care, guys.